Very good morning to our RANsquawk listeners. Welcome to the European Rundown for today, Tuesday the 18th of January. It's come out to around 11 o'clock now here in London and check around the markets in what has been a very busy day in terms of news flow. Starting off with the talks that have been ongoing in Brussels between the European finance ministers. It seems as though we are making somewhat of progression in talks in potential expansion to the European Financial Stability Facility. As has been mentioned though by an EU official in the last few minutes, they are somewhat divided on how they'll progress, with Germany's finance minister and economics minister already sounding continued opposition toward expanding the programme, but softening slightly by saying that they are looking at the flexibility of it. As such, the euro is off to a good start this morning, up over 100 pips already, and we've seen predominant dollar weakness on some renewed optimism that they might come to some kind of agreement either today or going forward, with the March deadline still seen in place for the actual changes to take hold. Elsewhere as well, getting attention this morning has been an El País article which has suggested that the Deputy Prime Minister of Russia has said they might potentially look at changing their policy going forward and look at purchasing Spanish debt going forward, something which we've seen most recently last week from the likes of China and Japan. So the euro looking very firm this morning. The dollar index, that's down, has been down around 0.75% of this low, which does mark an 8-week low, which has also aided the likes of cable as well, which has been fundamentally boosted by the fact that the UK's December CPI print came in much higher than expected, a number of 3.7%, a large increase from the previous of 3.3. You'll also see around a 36 spike lower in gilt futures on the release. In terms of other economic data of note, we've also had the latest in terms of German ZW survey that also exceeded expectations and put further weight on Bund futures in particular, and further aided the rise of the euro today. Elsewhere, in terms of the peripheral bond auctions we've had in T-bill sales, the likes of Spain in particular sold in the midpoint of the indicative range, but average yields have dropped, as too have they in the Belgium auctions as well that we've just seen in 3 and 12-month issuance. So all the auctions today so far, that is Spain, also Greece and also Belgium in T-bill sales, all going through successively as we did see last week. So as well aiding some of the optimism on Europe so far today. Looking forward though, in terms of the rest of the session to come from the US, we'll have the weekly ICSC chain store numbers. Potential return to Empire Manufacturing is expected to show an improvement on the headline reading. Red Books due after, and then we'll also look out for the Bank of Canada rate announcement, where rates are expected to remain at 1%. And then the NAHB Housing Market Index wraps up the economic data at 3 o'clock London time for the US. Fixed income, the New York Fed are conducting a TIPS purchase today, April 2013 to Feb 2014, to $1 to $2 billion. And also something to keep an eye on later on in the session is the confidence vote for the Irish Prime Minister Brian Cowen, who has come under continued pressure after Ireland enacted that bailout a few weeks back. We'll look out for those results later on in the evening around 8 to 9 o'clock London time. That concludes the European opening wrap. We'll have another update at the cash equity close this afternoon. So for the time being, have yourself a great trading day.